Hello and welcome back to EQ Markets Global YouTube channel. This is 𝗦𝗛𝗔𝗥𝗘, the head of education and research, and also the head market analyst for EQ Markets Global. I have just a big thank you to everyone who joined in for our trade, the NFP news, with 𝗦𝗛𝗔𝗥𝗘 on Friday. I mean, that was massive, massive, and incredible. Right, a lot of people making so much money trading the NFP news. I mean, that was super amazing. So even as we look forward to trading the next NFP news in the coming weeks, I want you to prepare yourselves and get your accounts ready, get your accounts funded, and also be part of the next trade, the NFP news with 𝗦𝗛𝗔𝗥𝗘. But before you're waiting for that to come, don't forget that at EQ Markets Global, we always have live market sessions on Tuesdays, 1 p.m. You can join our Telegram channel or look in the description below to find the link to join our Telegram channel or follow us on all our social media handles as well. Don't come to the live market analysis with an empty account. Get your accounts funded, all right, with EQ Markets Global recommended broker, which is equity, all right. Get your accounts funded and come up. Let's trade together. So let's quickly go over back to the weekly market outlook for this week. So starting with the economic calendar for this week, we see a lot of fundamental happenings that are coming out for this week. We see that Monday is actually void of all fundamental happenings that is going to happen this week. Monday is void. And then as well on Tuesday, we also have the claimant count charge. And most importantly is this data we're expecting by 1:30 p.m. on Tuesday, all right? This data called the CPI. So yes, we have the CPI month on month and the CPI year on year, and as well the core CPI month on month coming out on Tuesday, 1:30 p.m. So we already know that CPI, Consumer Price Index, is one of the very key indicators that is used to measure the hardness or the easiness in an economy, okay? Especially coming from the aspect of the real consumers, okay? They tell if things are difficult in the economy or not. And of course, for the Consumer Price Index month on month, we see a little nosedive, all right? It simply means that things are gradually taking a U-turn in the US economy, right? Don't forget, before now, Jerome Powell has come out to say that they are going to also continue hiking interest rates in order to fight inflation and stuff like that. And of course, we've seen in the last 8 weeks or 9 weeks or so that the highest interest rate hike in the US economy in the last 40 years. Okay, in the last 40 years, the way interest rate hike has been hiked in the way interest rate has been hiked in the US in the last 8 weeks is never unseen in the last 40 years in the US history. So that's something also of noteworthy. So coming back to the CPI, for us to start seeing data from 0.5, we're expecting around 0.4. I mean, it's pretty amazing. It simply means that things are beginning to get a little better. And of course, inflation is not eating so hard on the US economy as well. And as well for the core CPI month on month, we're seeing also from 6.4% to about 6%. That's also pretty amazing, right? And then, of course, the core CPI month on month remaining the same. So if we see these data come out just like it is planned here, or just like we are expecting it to come out this month, then of course we are going to see a continuous devaluation of the US dollar. So we're going to see more bearish movement on the US dollar. And of course, if these data come out to be above 0.5% and as well 6.4%, then we're going to see a strengthened dollar. But of course, that's not what we're expecting. For me personally, I'll tell you my bias in the next few minutes. And then also, we will be expecting some other core PPI data coming out for the US on Wednesday, and then also retail sales month on month. And the interesting one again is going to be happening on Thursday, which is the monetary policy statement, or rather the main refinancing rate for the euro. And of course, that will be coming out by 2:15 p.m. So we should really take note of that for the euro, okay? We're having a main refinancing main refinancing rate coming out for the euro 2:15 p.m. And of course, we want to see the European economy also hiking interest rates by a whole 50 basis points. All right. So those are the data um, um, literally we will be expecting in the market for this week. Let's quickly jump on and look at the dollar index and see what we can get of it this week. So remember, for those of you that were part of the NFP, we said the dollar was going to devalue, and of course it did. So this week, if we see the core CPI and the PPI data come out lower, of course the dollar is going to trade well below around 103.998. Okay. And of course, if the dollar continues to devalue and is able to break this particular zone around 103.998, then we would see a further decline into this zone here around 101 or 100. All right. So somewhere around this support zone is where we would see the dollar fall to. So for this week, I am pretty bearish biased for the dollar. All right. I'm biased. I'm sell biased for the dollar. I'm sell biased from every indication. I'm sell biased for the dollar. Of course, you can see how it played around this resistance zone, all right, this supply zone, and was unable to break this particular zone. All right. So if this zone is well respected, then the next zone it's coming out to test is this zone. So we see in the next coming days more devaluations for the United States dollar. All right, so just briefly, the currency strength meter. Of course, we used to see the Aussie being very strong, of course, but this week we have the CHF being the strongest currency pair, and the weakest to be the dollar, the CAD, and the Aussie. So of course, you know how it works, right? Pairing the weakest against the strongest can give you some good opportunities to look out for. Most especially, you'll be finding some trending markets. So your trending strategies are going to be best used in cases just like this one. So we might be looking out for USD CHF, USD CAD. Okay, sorry, USD, yeah, USD CHF or CAD CHF, AUD CHF. All right, and of course AUD GBP AUD. Also we can look out for AUD JPY and stuff like that. Okay, so those are where you can find trending markets, pairing the weakest against the strongest. All right, so stay up to date and follow us on all our social media channels. We are EQ Markets Global on Facebook, on Twitter, on LinkedIn, on Instagram, and as well on YouTube. You can also find us on TikTok as EQ Markets Global. Do subscribe to all of our pages and stay abreast with the latest informations, promos, offers, giveaways that we normally do on our platform. And also, don't forget, do also subscribe to this YouTube channel and turn on the notification bell. Put it at all so you get notified every single time we put up amazing and super amazing content just like this one. All right. So just before we go, we'll look at a few currencies to we'll make some analysis on what we have. All right, just before we go, we just make analysis on what we have. And of course, we're starting with the euro dollar. Okay, we're starting with the euro USD. Of course, this is on the daily time frame, and as well here we can see how nicely this is playing out. So for those of you following the analysis, I told you that where dollar is heading is somewhere around this level here. All right, dollar is trying to edge back to 1.11335. All right. And of course, it might take a little time, but trust me, that's where dollar is going. So I'm still strongly buy bias on dollar, especially that we're expecting I'm buy bias rather on Euro USD, especially that we're expecting more devaluations on the United States dollar. All right. So if we look at this, so a couple of reasons to verify our points to say, all right, this is the reason why we are expecting the euro dollar to continue going up. All right. So of course, if you look at it on the daily time frame first, this is an amazing trend line which has been respected countless times, and of course was still respected on Thursday and Friday last week. All right. And of course, from the CCI, we also see a bullish momentum. So for this week, what I will be expecting is a little push to the downside, perhaps somewhere around 1.05657, or well above that level. We might most likely see the dollar come to play around 1.05827. So within this zone is where the dollar might play with. There might be some form of consolidation up until respecting this trend line again. And of course, we're going to see, okay, so this is what I mean. All right, respecting this trend line. And then from this trend line, we're going to see continuous bullish movement on the euro dollar. So that's what I feel it's going to happen for the euro dollar. For the GBP USD as well, we're going to see some form of little retracement. All right, we're going to see some form of retracement. And of course, after that retracement, right, into somewhere around this zone, right, then we might see, we would see rather more bullish movement. So just to buttress that point as well, we can look at that on the daily time frame to see where the GBP USD is going. All right, so it's going to actually retest this trend line that is well respected on the daily time frame. So this the trend line is going to retest. So we can see in the coming days, not this week, hopefully 2 weeks from now or even more, we can see the GBP USD coming back into 1.26145. All right, around that price level. And then for the gold as well, now, the gold, you should understand, is in a critical point right now, all right? The original movement on gold in the past weeks, in the past 2 weeks, is bearish. In the past 2, 3 weeks is bearish, right? So this is only but, I would say for me, a bullish retracement, all right? So let's quickly look at it on the weekly time frame, and then, of course, we would scale back. So if you look at it on the weekly time frame, you can tell from the oscillating indicator that we have bearish momentum in dominance on the gold, right? So what happened was gold actually got to a major support level. If you can see that level here, around 1805. And of course, that's that major support level that it was trying to adhere to. So, okay, after that level, you can as well see that the next levels we look out for, it's either this level because of this top here, or we look out for this level here. So in the coming weeks, I see gold actually taking a U-turn and selling off from around this level, 1872.3. All right. And of course, if that zone is not respected, then dollar is coming to 1923. And of course, from 1923, we can see a sell-off. All right. So if I were you, I'll look out for dollar respecting the zone. But if it breaks this zone, I'll enter for a buy to ride up to around 1920, 1923. And from that zone, I'll take a sell, which is going to see me all the way down to around 1683 in the coming weeks. All right, so that's my take on the dollar. A little push to the upside, and then we have a massive sell-off. For the USD card is going to be one of the hottest picks for our week. Okay, why? Because of course if we look at it on the weekly time frame, this is more like coming to make a double top, right? This is more like coming to make a double top somewhere around this level, right? So what we just watch out for is for when the bullish momentum would be over on the weekly time frame. But of course, we should be looking out for that on the daily time frame, and looking at it on the daily time frame. Although we still have the bullish momentum in play, but then of course we can see that gradually it's losing its strength. The bulls are losing their strength, and this area is very critical. It's a potential trading area because of this zone that was respected before. So it came back into this zone. So what we expect is once the strength of the bulls are weak, all right, we join the bears to take over the market and ride it all the way down. So it's going to be one of the hottest pick for this week, USD card. All right, so let's look out for bearish movement on USD card. And as well for USD JPY, we would continue to see more bearish movement. Of course, we've already seen that the bulls are the bears are gradually dominating the market, right? And of course, this just began, right? So to be on the safe side, let me show you what's going to happen to be on the safe side. All right, so to be on the safe side, we'll most likely see, to be on the safe side, we would most likely say that the dollar the dollar yen is going to fall back to 131.567. But of course, well below that level, I'm actually looking at it to fall down to 127.048. All right, but to be on the safe side, let's say it's going to fall back to 131.567. So look out for more bearish movement on the dollar yen. Just a quick one for the United States oil. All right, the overall sentiment is actually a sell, but then we might have some form of bullish movement first. Right, so you can see this is a trend line that has been respected, and of course you can see it keeps building higher highs and higher lows, higher highs, and of course it kept going. So what I'm expecting this week is for the US oil to actually be appreciated at least to $80 per barrel, okay, from $76 per barrel to around $80 per barrel. From that level, we might see it fall, or we might see prices even move up into somewhere around $84 per barrel before we experience the shorts. All right, the last but not the least is the US 30, which is the Dow Jones, okay? So last week we were actually looking at the Dow Jones bouncing off from here, which it eventually did, but this time around came back and break this zone. So what I will be expecting that is going to happen in this market is something very simple. Prices coming back to retest this zone and continue to go down. All right, that's what I'm actually expecting on the Dow Jones. All right, so let's look out for a slight bullish movement, and then the bearish dominance is going to set in and still take over the market. Okay, for GBP and ZD as well, it's also one of the odd peaks that you might want to look out for opportunities in there. All right, so yes, you know that this zone is actually a critical zone, right? So let me map that out for you. All right, so this zone is actually a very critical zone, and I'm going to tell you why this zone is very critical, right? So if you notice very well, this particular zone had acted several times as a resistance and as well a support. So resistance, resistance all through this place, a break, support, 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 break, and then this is a retest and another retest on this critical area. So what I'd advise is we look out for when our momentum indicator is going to tell us that there is a bearish set in, a bearish pressure or a bearish dominance in the market, then I'm going to take my sell. Right. So even on the 4 hourly time frame, the bulls are still dominating. So I'll just stay put. All right. Prices are trading around my potential trading area. Yes, number one, tick. But number two is I'll be looking out for when the bullish dominance or the bullish trends will begin to nosedive. Then I jump in for a sell. Right, so somewhere around this level, key levels to look out for is 1.96720 and then 1.96157. That's for GBP and ZD. So thank you so much for staying up until this time. Don't forget to subscribe and turn on the notification bell and get notified whenever we put out amazing content and even more. All right, for now, bye.